we have seen in the year 2020, we have seen huge volatility spikes, right, especially in the first quarter of the year. The VIX, which is the index for the volatility, went up to 80, right, and we are currently down to roughly 20, 25 in the range. So we are still structurally above the levels of 2019, but we are below what we have seen. And therefore, if you take into account the development of the volatility on the one hand side, on the other hand side, if you take into account the situation around the net interest income, where we have seen the decline on the net interest income in the United States, it's very clear this year the expectations are a little bit more muted. And I also need to say that we are suffering from the fact that in the first quarter 2020 we had an exceptional strong year, and therefore we cannot repeat this most likely in the first quarter 2021. But given our acquisition of the institutional shareholder services, right, the dynamic of the growth will come back over the year of 2021.
Let's talk about your growth targets, because 10% revenue growth on average and also EBITDA growth seems very challenging. So how are you planning on achieving that?
Actually, this is not simply a plan which was developed by the CEO in a lonely room. So what we did, we went through the dynamics of the markets. We looked into the trends. We looked into what are the opportunities on the growth side coming up, bottom up, from our teams, from our segment heads. We discussed with them, and they came up with quite a bullish view about the next 3 years, underlined by the trends of more passive investments, ESG, over-the-counter to on-exchange trends. That all helped us a lot, right, in our structuring of the next 3 years. And quite frankly, we have shown a similar growth over the last 3 years, and therefore there's no reason to believe that we can't get it done, and we are a little bit more ambitious on the M&A side.
Let's talk about the effects Brexit is having, because here and there it's popping up that certain market areas are actually moving to the continent. So do you feel a positive effect as well from parts of the business which is getting relocated to continental Europe and to Deutsche Börse?
I do think that is actually a very nice trend. It will help us, hopefully, in order to get more momentum on the EU 27, right, in the new setup. That's good. But on the other hand, right, it's for us as Deutsche Börse, we are a global company, and I think our major growth trends are not stemming predominantly from this effect.
If you look at recent volatility when it comes to Trade Republic and the GameStop in the US primarily, but are you concerned about this kind of development also in Europe that could cause a lot of volatility in certain areas of the market and certain shares?
Firstly, I think we should differentiate. Of course, there's a differentiation between many people are talking about David against Goliath now, right? And it's a lot of story behind it. It's like a fairy tale, right? That young people are now fighting against these hedge fund managers. But the truth is, there's an underlying situation. Underlying situation number one is you have much more liquidity in the market, which structurally drives volatility, and people are in a situation they need to go into higher risk classes in order to create yield, right? Because you don't get any yield on the fixed income side, right? If you buy bonds, you basically don't get any yield. That's the first trend. The second trend is the development of the neo-brokers who have developed a completely new business system, with a different charging model, right? And we have also seen these neo-brokers like Robinhood or Trade Republic in Germany. They have had a great development over the last couple of months, but it's also pretty clear these are fairly young companies, and if certain situations are popping up like GameStop or others, then the markets are peaking in these specific stocks, and then the volatility rises, the risk, right, increases, and then the CCPs, the central clearers, are saying, I need more underlying capital. And therefore they interrupt, right? They interrupted the trading, they request more capital, and many of the younger neo-brokers, they do not have the capital equipment, the capital basis in order to cope with that. And that is a normal situation, but at the end of the day, it shows so far the markets are functioning. And I keep my fingers crossed for all these young people out there who think that it's a opportunity, but they need to be aware at the end of the day, right, markets are rational, right? And I think it's not a sustainable business model to be active in working against short sellers and to wait for a short sell squeeze. I don't think that's an appropriate model for young people.